This week in the parish of bourses and market structure, now it's NASDAQ with plans 24x5 as Hong Kong exchanges and Hong Kong Monetary Authority add heft to connect clearing. Over at LSEG, misery loves company while MOEX post more robust results. My name is Patrick L. Young. Welcome to the Bourse Business Weekly Digest. It's the Exchange Invest Weekly Podcast, episode 286. Good day, ladies and gentlemen. This is a very brief reduction in the highlights amongst the key headlines from the week in market structure. All the analysis of the many events and happenings from the past 7 days can be found in Exchange Invest Daily Subscriber Newsletter, the unique guide to the Bourse business and daily to your inbox. More details at exchangeinvest.com. Over in BitCarnage, we've been looking at backing Bitamax. No sooner did Charles Gasparino opine in his New York Post column Trump's plan for crypto strategic reserve could hit roadblock in Congress than CNBC reported Trump signs executive order establishing U.S. strategic Bitcoin reserve ahead of his much-vaunted White House crypto summit. So with the reserve funded by appropriating government-appropriated crypto, one wonders if there is an appeal risk. In any case, the bickering goes on with even outright disagreement as Solana's co-founder opposes President Trump's crypto reserve proposal. Back to Gasparino, and I quote, "And why is the government hoarding something that would compete with US dollar-based assets like the debt we need to sell?" If you enjoyed this excerpt, you may be interested to know you can read BitCarnage every day in Exchange Invest. Alternatively, if you want to follow BitCarnage, the daily update on happenings in the world of crypto and digital assets, you can find BitCarnage as a standalone on Substack. This week in exchanges, the markets never sleep, should trading. That was the headline of a Tal Cohen LinkedIn post discussing NASDAQ's plans for 24-hour trading as the global appetite for US stock grows, as the Reuters headline went. Tal Cohen leapt NASDAQ into the 24x5 US stock market debate with, unsurprisingly, plans to join the fray alongside Nicey et al. But of course, this remains subject to SIP and more constraints in the US market, which means a lot of committee time in the future before the exchanges can launch. The main players want to be there, but the issue remains how to get the SIP committee and other plumbing to operate overnight with committees to be convened. For now, the ambition of the US listing duopoly as well as Cboe will be restricted by their exchange status. That hands overnight market leader Blue Ocean Technologies an ongoing advantage to keep building its trading before the exchanges can join in. And when might that be? Well, Exchange Invest has been making educated guesses this week, and it looks like it may be quite some time into the future. Over in Hong Kong, they're targeting the creation of a rival to Euroclear, and global markets will be all the better for being able to settle without recourse to the 7 tiers of Belgian management, or indeed the ludicrous strictures of the EU's regulatory fervour. Eurex, meanwhile, out of Paris, Amsterdam, Brussels, and its other centres, have responded to the report there's no market in market data. Damningly. Euronext are the latest to call out the Nikkei B research paper, which clearly thought if it could fool the journos, it could convince the market structure. Various industry bodies have embarrassed themselves by putting their names to this report, alas. As Euronext notes tartly, the report's pivotal argument is based on incorrect data. Over at the LSEG, London isn't alone in facing listing challenges. ODD, out of his depth Dave, reminds us how far out of his depth he actually is running an exchange business, even if on a clearly part-time basis. With the perfect old line, Reuters' excuse, aka lots of people are losers, so we're in good company. To which the obvious retort ought to be, lots of losers are unemployed too. Then again, do we expect anything else from out of his depth Dave other than a misery loves company defeatist message? Thanks for listening to Exchange Invest Weekly. We welcome your feedback. You can contact me directly, patrick@derivativesvision.com, with any comments. Meanwhile, if you enjoyed this show, we would welcome you giving us a thumbs up. Or, if you have time, a positive review will always be welcome, wherever you find this podcast. In results, busy week for results in the parish. All the details are on Exchange Invest Daily, the newsletter no person can afford to be without in capital markets and market structure. For the sake of this podcast, let's look at some edited highlights TESE, that's the Tel Aviv Stock Exchange Group, they reported their financial statements for Q4 and the full year. Not spectacular, but not half bad either, given the nature of what's been going on in and around Israel recently. Q4 revenues up 14%. Net profits 2024 saw record revenues up 12% overall at NIS, that's New Israeli Shekels, 437.9 million, with net profits for the year up a healthy 22%. Moscow Exchange, similarly spectacular numbers there. 2024 operating income up nearly 39%. And overall course of the year, net profits not so good, down 13.36%. But at the same time, Q4 net profits looked rather healthy at up 30.41%. MOEX has managed against the odds to maintain a remarkable franchise while the Russian economy has gone from Putin normal to outright war footing. Over in new markets, the second stock exchange has opened in South Korea. Next Trade has launched in Seoul. They've got an ATS MTF competitor platform. They're trading longer hours for less fees, and they're ending the 70-year monopoly of the KRX. In Brunei, the stock exchange there is preparing for launch. Back in 2020, we'd reported a $21 million budget had been set aside. Way back in 2017, some people even thought the exchange would launch that year. In more recent times, there has been no clear deadline for the Bourse project, but it looks to be healthily funded. Meanwhile, Exchange Invest is proud to have launched a special edition inspired by my visit to ring the closing bell at the New York Stock Exchange July the 5th, 2024. Patrick L. Young's original bestseller, Capital Market Revolution, the first breakthrough book in fintech, a decade before that word held common currency, has over 10,000 new words of additional pith, placing the past quarter century in perspective, alongside the original text, which has proven remarkably successful through the years. Capital Market Revolution 25th Anniversary Edition is published by Exchange Invest and is now available as an ebook via Amazon Kindle at a ludicrously reasonable price of $9.99, a quarter the price of the original shorter print book a quarter century ago. Meanwhile, if you fancy some financial insights with moving pictures, don't forget, check out our archive of our live streams. They're usually live Tuesdays, 5 o'clock London time, midday New York time. Most recently, I had an excellent oration on a new world order, giving my Nairobi AFM keynote speech from that fabulous Kenyan conference, which was re-recorded for posterity after the event, and that constituted IPO-VID 172. Catch it online now at Facebook, LinkedIn and YouTube by searching for IPO-VID. Our finance book of the week this week is The Corporation in the 21st Century, Why Almost Everything We're Told About Business is Wrong, by the brilliant economist Sir John Kay. It redefines our understanding of successful commercial activity and the corporation, describing how we have come to love the product while we hate the producer. In product news this week, what a milestone. The Toronto Stock Exchange celebrating 35 years of the ETF, the Exchange Traded Fund. Not a lot of people remember that it was actually created in Canada originally. The world's first ETF was launched on the TSX, the Toronto Stock Exchange, in 1990. Meanwhile, lithium carbonate futures are now live for trading on ABAX Exchange. In technology news, while repeating what we mentioned earlier in terms of the steps towards a CSD, a Euroclear of Asia from Hong Kong, the technology part of the equation, Hong Kong Exchanges signed an MOU with CMU OmniClear of HKMA to enhance the post-trade securities infrastructure of Hong Kong's capital markets. Absolutely the best and most exciting settlement news of the week, adding a new layer to fixed income trading on Connect and within the SIR of China. Elsewhere, Cboe Canada completed their technology migration. They're all now on Cboe Titanium, and they began trading there on March the 3rd, completing a 15-month integration effort. In career paths, over in Kazakhstan, it's the end of an era as the brilliant CEO of the Kazakhstan Stock Exchange, Alina Aldambergian, has announced her resignation after a terrific spell growing the exchange group in Almaty, the Kazakh capital city. I wish Alina all the very best and welcome the elevation of Adil Mukamayanov from leading the CSD to lead the entire exchange group. Elsewhere, Expree, the vendor, provided some splendid news this week. They've appointed Magnus Almqvist as CEO to drive the next phase of strategic growth. All the very best to Magnus. Competition is considerable in the systems market for execution and trading systems right now, with excellent matching engines from Connemara and NASDAQ, to name but two other parties. Meanwhile, as Cboe announces the promotion of Chief Technology Officer Tim Lipscomb to EVP, Skilla The Swedish vendor, they've strengthened their team with a head of marketing and communications being appointed, and I'm delighted that that person is none other than the brilliant Fredrik Backlund, who's returning to the parish, having been the head of marketing at Cinnober during their golden years, with Skilla further developing their risk portfolio beyond their terrific surveillance platform. It's the perfect time for Fredrik to be added to their Stockholm team. Meanwhile, in Big World, there will be some more and better state growth figures to come out soon, but it's worth noting the top 5 fastest growing US states between 2019 and 2024. Over that 5-year period, and after inflation, by the way, Idaho grew 23.3%, Florida 22.84%, Washington, that's the state, not the blob belt of DC, grew by 18.37%, and Tennessee by 18.12%. If we exclude inflation, some of these states grew their gross economy by 40% or more. Remember, excluding inflation, the entire EU grew 9% over 15 years, 3 times as long from 2009 to 2024. And on that mysterious and magnificent note, thank you for listening to this Exchange Invest Weekly Podcast number 286. Join us daily via exchangeinvest.com, or if you have a new exchange you'd like built, get in touch. My name is Patrick L. Young, and I wish you a great week in life and markets. This show relates to the business of bourses. It is not to be construed as investment advice, nor are we making any investment recommendations. Please consult an investment advisor before you make any investments, and for goodness sake, do your due diligence and do not make investments without complying with the regulations in your home state. Exchange Invest cannot be held responsible for any investment decisions made as a result of our program, which is for entertainment purposes only. The material herein is copyright Patrick L. Young at the date of publication, while our music and sound effects are sourced from copyright-free sources. Thanks for listening to Exchange Invest Weekly, the exchange of information.